What's up, YouTube? It's Todd Horst here with Tasty Tracker. Today I closed out Costco at $17. I wanted to close that for $10, but I was kind of getting antsy a little bit today and wanted to play some stocks that have been consolidating. So yeah, I was going to wait till that got to 10, but I have 14 more days here, and sometimes when you get down to this level, it just kind of hangs there because there's still some value in the position. So instead of just waiting till it got down there, I moved on with my life, closed that position. That enabled me to open up two positions, the SHOP and the DOCU position. So the SHOP position I went for, opened up for 208, and DocuSign I opened up for 260. You can see both of those actually got better fills than what I had put in for. I put 205 and 259. So Tastyworks definitely is better at getting you fills occasionally. Obviously, this is not every time if we look down here, but I would say maybe a third of the time I get better fills than what I'm actually putting in for. Okay, so why DocuSign and Shopify? First of all, these are both great companies. They have high value right now. So DocuSign is trading at 140 and Shopify is at 730. So these are great companies. They're not shady ones that are going to be gone tomorrow. They both have been on good trends before Corona and post-Corona. They're both tech companies, which tech is currently sort of the safest place to be with Corona. And we can see here DocuSign has had a couple bad days where it's consolidating, but it's sort of finding a bottom here. It's coming back down into a normal RSI where it typically bounces at in this range. So I'm not saying I timed this perfectly or anything like that, but I think in the next couple days you can expect it to bounce and at least trade sideways for a bit. So all of the stocks in the market right now are sort of consolidating and finding themselves again. And so right here on the 50-day SMA, it's already catching up to the stock, which I view that as a good thing. Okay, so that's DocuSign and Shop. Same story. 50 is starting to catch up. It's sort of found a base. It's been consolidating here. It even had a try getting higher, but then it came back down and again found its base. So this is confirmation to me that we're ready to turn around and start making progress. But the DocuSign, in order to get enough premium to allow me to open it, because I have such little capital available, I had to go the whole way out to September, so that's 105 days to expiration. And then I had to go further in the money than what I typically like. So let's go over here. So with Shop, that's 40%, 46% in the money, which is not too uncommon, but it is a little bit higher. I typically like to stay around 40, and 42 days to expiration is perfect. So this is right within my normal wheelhouse. It's pretty good premium. Typically I'm looking for 160-ish, and so to get 208 is to me worth that extra 6% risk to get a bit more premium. For DocuSign, this is a 57% in the money, and so because that's so aggressive, I want to go out further, not to mention that going out further gets you more premium. So so the combination of being aggressive as far as in the money, aggressive strikes, as far as going out further, enabled me to open this position, and so that was 260. Again, that's pretty good premium in my opinion. Yeah, so 105 days to expiration, 57. So here we can see the Costco position. I netted out after commissions $98, which is pretty nice. Definitely nothing to laugh at. It did take 31 days for that to close. Yeah, $3 a day. Let's go over to the portfolio. So with SPY being up so much today, the count obviously showing that is 23 73 right now, although it's been jumping between 22 and 24. So so right now it's on the upper end, but we'll see where it lands. So yeah, so this, let's get rid of DocuSign here. This is the diagram for next month, and then we'll go through each one individually here. Let me use two hands. Okay, so here's Apple, well within the green. Microsoft, it's really good that I did the combined position yesterday or whenever that was. I still intend on it getting above 190. It's at 186 at the moment. But that enabled the entire position to be 3% in the green right now. Whereas had I not done that, I would only be teeter-tottering on profitability. So having this extra lower set of strikes has enabled this position to have a much better break-even point. So individually, there's the lower strikes and then the upper strikes right on the cusp. We'll collapse Microsoft. DocuSign is the new position. And as you can see, that is right on the edge. But even being as aggressive as it is, that's still pretty good. It's sitting right in the middle there. So we're basically at our break even. If nothing happens between now and expiration, we would be fine. And then Shopify, we do have a little bit of margin. Like I said, it was 46 or something like that. But now it's saying up $18, and as you just saw, it jumped to 33. I wouldn't really worry about that. Again, Shopify jumps around like crazy, so whatever price you see there doesn't mean anything, at least for a couple weeks, until it can sort of solidify. So if you put the limit cell, or to open up the position, if you put a limit, you would probably be able to get filled at what I got, if not better. So anyway, yeah, I think that's really all I need to cover today. If you have any questions, let me know. Thanks, guys.